Topic: Insurance and Digital Public Infrastructure, the next stage. I'm going to now invite the speakers on the stage one by one and the moderator. The first speaker of this panel discussion is Mr. Hrushikesh Mehta, who is the Senior Vice President, Financial Services, Open Network for Digital Commerce, which is ONDC. I'd like to welcome Hrushikesh on the stage. The second speaker of this panel discussion is Dr. N. Srinivasa Rao, the Chief Economist and President, Corporate Affairs at Bajaj Finserv Limited, and board member at Bajaj Alliance General Insurance Company. I'd love to invite Dr. Srinivasa on the stage. The next speaker of the session is Shalini Gupta, who is the Head Strategy and Policy at Sahamati. Shalini, I'd love to invite you on the stage. The next speaker is Prasad Krishnamurthy, who is the Head of Insurtech Solutions, Perfios. Prasad, we'd love to have you on the stage. We'll now have the moderator, Shaleen Srivastava, on the stage, who is the General Manager and Head of Strategy and Fraud and Decision Analytics at Experian. Shaleen will also give a brief introduction of the speakers now.
Thank you very much for this opportunity. So I'll jump straight in. Today, we're hearing a lot of exciting things that's going on in the insurance world, especially from an insurance tech infrastructure perspective. But I'm sure we'd all agree that as far as India is concerned, nothing is much more exciting than it is in terms of the digital public infrastructure that's being created, and are we leading the way in the world in this? And we have a wonderful panel to talk about that today. But to start with, I would like to invite Mr. Mohit Monga and Mr. Manish Mishra onto the stage, please, to talk about the launch of Sachet Insurance on ONDC.
I'm Mohit from ONDC, and I'm part of the financial services team. And I have with me Manish. Manish is the CEO of PasCare, and we'll talk about the launch of Sachet Insurance on ONDC network, which has been sort of one of the, I would say, areas which the market has been sort of looking forward to, right? And asking us to kind of expedite as well. So we'll talk about that today there. I just like to thank Manish and maybe a couple of words that you can kind of talk about. So Manish and team from PasCare, they are an Insurtech and they volunteer to build these protocols. And we have a model where sort of companies can volunteer to build protocols on the base backend, protocols that ONDC uses as well. And so we work with them, right, in the release of these. So I think a couple of maybe Manish, you can give.
Sure. So thanks, Mohit. Thanks for the introduction. So with ONDC, the overall experience that I have had is like the backend protocol is very, very extensible and kind of gives a very good advantage in terms of innovating in terms of digital distribution as well as claim services. So I'll just highlight one of the key aspects. There are many different aspects of innovations that are possible, but one of the key aspects that is getting introduced through ONDC services is the derived data concept. In derived data, there is additional amount of data which can be shared right from the distributor application to the insurance company during distribution as well as in the claims process. So this is going to solve a lot of challenges that we face in terms of addressing the faith of customer during the distribution process. Insurance companies can take better decision making in terms of whether the insurance policy can be issued or not. And when it comes to claims, again, the data can be shared, which will help validation of claim in a shorter period and instant settlement. Those all things are possible. So, would encourage everybody to participate in this.
Thanks, Manish. And I think we'll cover what sort of Manish sort of alluded to as well. I think before getting to the what part of it, like what are the protocols and then how does it sort of really transpire, we'll just spend a couple of minutes, and I'm sure it's informed audience, you would all sort of know about the major gaps in terms of the adoption of financial services in India, be it in credit, insurance, or investments. A few statistics, I think, more relevant for insurance companies. We see adoption of insurance as a percentage of GDP. General insurance stands at 1%, which is way lower as compared to, let's say, similarly sized economies, as well as 3% for life insurance, which is I would still say low as a let's say a percentage of population that is covered right in India there. So major coverage gaps we see with what we've seen typically is that maybe last few years the percentage of people covered, right, has kind of plateaued out, right, as well, right? So, and there's still a kind of a massive protection gap with about 40, 50 crore Indians there. I think so. A couple of pointers around that. Um, Out of these 40 crore Indians, and I'm sort of referring to one of the BCG reports, which was published, I think, in last few years there. What we see is the gap is not just sort of in, let's say, less affluent sections of the society, but also if we talk about sections which are, earning relatively well, talk about household incomes even exceeding 10 lakhs there as well, both in metro, tier 2, tier 3 cities and across aspirers and, as well as the affluent class of India as well. So it's a sort of a gap, which I think the industry calls it as a missing middle, of about 40, 50 crore Indians, which, who are not really sort of protected, right, in eventuality, right, from that perspective. What we did further, right, to kind of, just kind of, peel the layer of the onion a little further, right, in terms of these 40 crore Indians, we said, okay, let's identify who are these, which are the segments of society over there from maybe a socioeconomic or, from an employment perspective as well. So what we've done over here is that out of those 40 crore, about 15, 16 crores are approximate, and this is based on conversations with various insurers. These are all, as you can see, split up into segments based on the working population. So manufacturing workers, construction workers, gig economy workers, which includes, let's say, people, domestic workers as well, and house makers there, right? So you see a split of approximately 15, 16 crore people over here. Both health and life coverage is actually fairly low. And these are all vulnerable kind of segments of our society over there. Any sort of economic shock hits them much more than it does to us. So I think one of the areas that, in fact, we have a workshop today after, in the second half as well. The focus is going to be identifying the fears, the needs, as well as potential use cases that can be kind of rolled out for these segments of the society as well, and potentially utilizing the DPIs that ONDC is kind of releasing. Now, related to the problem statements, our thesis over here is that while there are other problems with respect to having suitable products, maybe simplifying the products, but with respect to distribution, some of the problem statements related to non-standardization of sort of APIs, right, which connect the manufacturers as well as the distributors, is a one big major problem statement, which leads to invariably kind of an increase in the tech cost, both from maintenance as well as a development perspective, and also kind of creates barriers to entries for maybe smaller, nimbler players out there as well. Another one which Manish touched upon is kind of usage of data, and I think a lot of it is to do with like high quality, high provenance data that is made available at the point of distribution there, and we'll touch upon how the ONDC rails can enable that. And then high cost of servicing, right, which could potentially lead to sort of lowering the trust in the entire ecosystem over there for the end customers, and that could be exacerbated by maybe antiquated processes or manual processes, right, for claim processing over there. So our view over here is that a completely digitized process over there, distribution to claims processing, is something that can make the affordability, kind of improve the affordability with the masses, especially some of the segments that we touched upon earlier there. Yeah, so as ONDC, we see our role as a DPI primarily focused on three key areas: standardization, sachetization, as well as regulatory collaboration. And primarily what we do is that we kind of create standard protocols which allow connectivity between distributors, insurers, as well as the manufacturers. We also sort of work to kind of stitch out existing DPIs such as Aadhaar, KYC, eNASH, all of those as part of the protocols that we are using on the distribution side to kind of further improve and reduce the cost of distribution. Here we collaborate with various entities, including NPCI, regulatory bodies as well. Right. So that's our role overall. And I think now we can kind of maybe spend some time, Manish, if you're around, we can cover this aspect, which is related to the sachet insurance on the network there. So I'll just briefly touch upon it, and I think let Manish sort of cover other finer aspects of it. Basically, distribution of sachet insurance on the ONDC network involves, there are various sort of nodes on the network, right? And these are playing different roles with respect to commerce, credit distribution on the network, buy side, sell side, logistics. each of them potentially can become a distribution node, utilizing the standard rails for distribution of sachet insurance policies. The rollout of the master policy, which is the group policy, essentially is right now outside the ambit of the network over there. So that's an arrangement that each of them will actually have to kind of do with the insurers over there. Additionally, it's the facility of sharing the alternate data based in standard containers that can allow the insurers to kind of underwrite these policies better and price them better as well for various segments. So in a gist, that's sort of what we are intending to do with the sachet insurance, and the protocols will be released, and we'll share a communication with everyone in coming days there, right? You want to add?
I'll briefly touch upon like how these things are getting standardized. The overall the backend protocol, it makes it divides the entire buying journey and the servicing part into very simple standard procedures, which is applicable to a lot of products, not only insurance. So this is where like searching happens. Searching is the place where user comes in, starts searching for the product. So that is like over there, there are standard rails which are laid out, like what data can be shared to which insurance product type. So those all things has been formalized, and now with that kind of a standardization, you can expect more amount of data, more amount of contextual data coming in on which, based on which insurance pricing can be done. Once the select phase, once the search data is shared, then during the selection process, user has options to select which particular option to go for. And yeah, you want to add something?
No, I think that's it.
Cool, cool. So great. We can have more discussion, like if anybody is having questions.
So we'll be doing a clarification call. So I think once we send out the release communication, we'll actually set up a clarification call where your teams can sort of join and then understand more on the protocols and the construct over here. So yeah, I think that's about it. And thank you for I think kind of being around, right, to sort of to know that. Thanks.
Thank you, guys. Thank you so much. Congratulations on the great launch. Fantastic. So let's get started with the panel. Jump straight into it. So, Rushi, we'll start with you. My first question: has your team left anything for you that they haven't covered?
So look, they've covered largely what we do at ONDC. I think I'll cover two things, and I think we've taken up too much time from everyone else, so I won't talk for more than 30 seconds. But largely the issue is to provide inventory to the demand generators and aggregation of that inventory. So today, if you're integrating in custom fashions, the negotiations of APIs, some of the Insurtechs that sit in the middle do some of this work. Our goal and our superpower is to able to standardize that. So when we talk to insurance companies, we ask why they need every field. If they say, oh, because we don't know, then you go ask your underwriters, do they need it? If they don't, drop it off. So you try to slim down the process and try to standardize it so that it becomes easy to aggregate both demand and supply. And the way we think about it is, just think of it like roads connecting cities, that we can give you a standard version of that. So if you do want to enter the space, you have to make one integration and you're good to go. The other thing I just want to like briefly talk about is, we talked about regulatory collaboration. So what happens is, the regulator solves for today, tomorrow, and yesterday, and sometimes a little bit of tomorrow with the sandboxes that, most of them are coming out, whether it's the RBI, SEBI, and even IRDI. So the idea is today, regulations exist for something that is happening today, maybe that happened in the past. What can we collaborate and sandbox about things that will happen in the future? Like, for one, like this is an insurance crowd, so you have retail distribution, you have group distribution, but you have nothing that sits in between, like a monetizable group distribution, monetizable. You have retail distribution, but you can't really do sachet products because onboarding a 3 rupee customer doesn't make any sense doing it in a retail. So if you really want sachet products out there and bring down the cost, what can the regulator do to help us is the question. And, a simple thing, like it's an idea that I have actually floated, just like the credit guarantees in credit. Why can't there be claims guarantees for new segments where we don't have enough data to be able to underwrite, where the government comes and picks up some of the claims within a certain period of time? So I think then to get to that bottom of the pyramid and to sachetize, to digitize, I don't think what we did yesterday will work for tomorrow. And there might be need a willingness to try and fail before we can get to that segment. So, I like the overall thesis is we want to digitize, sachetize, and bring more people in to the fold. But I think we might have to do things a little differently. And in all segments, it's not only insurance, the same things apply to the other financial services we're tackling. So I'll just stop there.
Oh, that's great. Thanks a lot, Rushi. Just one question, just to add on. You've seen a lot of success with mutual funds and obviously on the loan side of things. Anything for the insurance sector to really learn from that?
No, so look, I mean, credit, like just to give you a sense, we had about what is it, 120,000 applications with about 2-3 lenders and 10 lending service providers that have gone live since we actually put it in production in Jan. And it took us 7 to 8 months to do 100 loans because of all the tech issues. And credit is the most complicated. You compare that to mutual funds where there's no gating criteria, no underwriting. You select the product, pay and buy. In 2 weeks, we did 500 transactions, right? Insurance should go live anytime soon. We're just clearing, I think, Policy Boss and Bajaj and HDFC. So we don't have experience with it yet, but I suspect it'll sit somewhere between credit and mutual funds because there is some underwriting. And KYC works fairly well. A lending KYC tends to be even more stringent than a insurance or mutual fund KYC, but we'll see. And when hopefully the next year, if we come back and sitting here, we'll come back with numbers and how all the various products they did. So hopefully by next year, we'll have more to share than we have this year on insurance.
Thank you. Thank you, Rushi. That was fantastic and really interesting to learn. And good luck with the sachet-based loan insurances. So next we move on to Shalini. Now, Shalini, everything that Sahamati has done in terms of the account aggregator infrastructure, can you describe to us what is the various successes that you've seen in regards to financial services? And again, how do you see this playing out in insurance, and what can the insurance sector do to really utilize to the max this great infrastructure that has been set up?
Thanks, Shaleen. So I'll just pick up from where Rishi left. So the key to financial inclusion, and this holds true across lending, insurance, and other sector, is standardization. And what account aggregator is doing is standardizing the data process for any kind of financial services. Data is integral for any financial services. The intensity may differ. So for lending, what you do as underwriting is significantly, more detailed than what, like he said, for mutual funds, it's hardly there, and insurance is somewhere in between. Frankly, I believe insurance needs to be more data driven as we move forward, and that's where account aggregator can be a big facilitator. And I'll give you some examples of how it has been used in the lending sector. So the lending sector is all about risk, and the risk is assessed at the time of onboarding. So what account aggregator is doing is it is getting you real-time data from the source directly for underwriting in a digitally consumable form, right? Which can directly go into your BREs and give instant decisioning. So that's where the standardization is coming in. The framework is already linked to more than 150 financial institution providers, and it covers more than 60% of the financial accounts of the country, which includes even insurance, mutual funds, DMAT. So the idea is to say that can you have a 360-degree view of a customer's finances before making a decision to lend, and it has started working really well in lending. In fact, we just concluded our survey on lending, and almost 8,000 crores of loans on a monthly basis are disbursed using the account aggregator framework. And the best part is now the framework is being adopted through the strategic, planning process of large banks and financial institutions. So earlier it was the challenger institutions which picked it up, to get into segments where they really wanted instant digital journeys. But now the banks are catching up, and that's where we see a lot of difference coming up. And I think that's what we also expect to come up in the insurance sector. Some early shoots have come up. We've seen account aggregator data being used for underwriting, for issuing policies, term life policies. And the initial response has been very optimistic. They want to also experiment with claim processing, underwriting of self-employed and low-income segments. So a lot of what has happened in lending, we expect that to replicate in insurance, but over time. And that's where, we need a lot more dialogue with the industry.
That's great, Shalini. Just one more question. So there's also a lot of fraud use case that we've heard about. You want to touch base on that and how that can help on the insurance side?
So when it all started, the first use case was underwriting, and the obvious explanation was that the data is fraud free, because it is coming directly from the source. That's it. So that was the first plain vanilla use case. But the recurring feature of account aggregator has really proved very powerful in the lending sector. So what you have is a view into the customer's account post loan disbursement, right? So that has led into evolve, a lot of sophisticated early warning signals coming up in the lending sector. You getting a view into the way the customer's finances are behaving after you've given loan to them. There's also end use monitoring use case that has come up. There are discussions around using the data for identifying mule accounts, and all that has led to a lot of excitement around the fraud management or the risk reduction capacity of the account aggregator framework. So one thing which I feel is that the fraud is like there in the entire financial sector, and if one part of the financial sector gets strengthened, the fraud, there is a natural tendency to fraud to shift to the weaker part of the financial sector. We've seen this happening in the banking. The banks who are very strong on fraud, the fraudsters over time realize and they'll move down the rung, right, where there is lesser fraud. And if the entire financial sector becomes stronger, they'll move to other sectors. And we all understand that even in insurance, fraud is a big challenge. We definitely see a lot of use cases from lending and learnings coming to the insurance sector, because it has to be fought at a sectoral level. The entire financial sector needs to be at the same level when it comes to combating fraud.
That's great. Thank you so much, Shalini. I think the account aggregator network has been absolutely amazing, and just the way you're going to include more data sources, as far as I understand, is really going to be game changing, especially in the insurance sector. Thank you. Now, moving more on to the consumption side. So we have Prasad, obviously, for Perfios. Prasad, as part of your organization, you guys have for the longest time enabled the access to alternate data, including bank statement data. So having heard everything you've heard, how do you see that? How can you help the insurance sector much more? And what else do you see or would wish would be included in the future for you to further help the insurance sector?
Sure. Thanks, Shalini. Being where we were as a technology service provider and a data analytics company, starting from account aggregator, it has been a big boon because, as Shalini mentioned, we get authorized data, which is not fraudulent, directly from the source in a digital standardized format, right? So that is like the basic manna that is needed to do any sort of analysis. And we basically the account aggregator framework or the any of the digital public infrastructure, right? ONDC or Ayushman Bharat Digital Mission. So all of them provide the standardized pipeline to get authenticated data directly from the source. And where we sit is utilizing that pipeline. So instead of you to take an analogy, say it's a corporation water supply, you get it till the entrance gate by the corporation, but to actually get it inside the house and be able to utilize for multiple uses. You need it in multiple bathrooms, you need it in a common area, you need it in a swimming pool. So that plumbing in a ready-made sense is what we are doing. And what we have seen, as Shalini also mentioned, is that lots of use cases have come up with using account aggregator data. So that you get financial data directly from the source, and that is very, very powerful, right? And the second part is the ease in the journey, which has enabled a lot of this data to come in. Today, whatever some of the sources are highly available. So from banking, GST, these are slightly more popular. But one thing with respect to insurance is that the availability of data. So we have the pipeline built, we have the plumbing built, but there has to be enough water flowing in that. So one, the success will come if we have the data providers feeding into the pipeline, right? So that is one part. So the more data providers feed into this pipeline, I think the more use cases that will come up, even in the insurance sector. The second part is say in platforms like ONDC, where distribution and whatever Manish had touched upon earlier, right? So addition of data. You are enhancing the amount of data that is available through these networks, because you are able to enrich and get a better profile and better be able to give better products and better underwrite them. The second part that I think Manish briefly touched upon is the claims. So when it comes to sachet or add-on insurance, one of the problems is claims. So having that also built in as part of the same open framework actually eases the process a lot more. I think going forward, these two things, availability of more data in the account aggregator framework and the ease of operation with respect to being able to distribute and manage claim in a single box, where any of the players in the ONDC network, for example, can on a turn of a switch be able to connect to multiple insurance providers and be able to connect to their customers and provide the service immediately without having to go through multiple integrations, multiple individual setups, right? So and this is where it is going to be really powerful.
Fantastic. Thank you so much, Prasad. That's amazing. You're absolutely right. I mean, the more the data that's available, it just enables the ecosystem so much more. And whatever said and done, I think India has really led the way in terms of accessibility at a consumer consent level for data. And I think it's really up to us as an industry to kind of look to utilize this further more and more in many more use cases. Thank you. So now, finally, moving on to Dr. Rao. Dr. Rao, having heard everything you have today, and everything that comes with your immense experience in the industry. Love to hear, how is this evolution helping the insurance companies, and what more can be done, and what should be done in the coming years to really maximize the servicing of the consumer down to the bottom of the pyramid in the digital ecosystem.
Yeah, thank you, Shalini. Like Shalini has mentioned, the key to improving customer experience lies in standardization and simplification of the entire data. See, unless you have a clear and very simple formats, uh, for the entire customer data, you will not be able to sell insurance. Basically, because the toughest challenge in the insurance sector, you ask 100 people, 90 people will say it is distribution. The first major challenge in the insurance sector is distribution. So the distribution, every player using technology today, we have got huge public digital infrastructure, which is being used extensively by the fintechs, but not so much by insurtechs. Basically, because the products which are sold by insurers, any product, any policy is a contract. So then you should have a customer life cycle experience. Over the life cycle of the policy, the customer experience has to be rich. So here, most of the insurers fail basically because you require an interface when a health claim comes up, or even a life claim or any other claim of an insurance policy comes up. The problem is the customer servicing and customer experience, the manner in which it gets settled. So we have got huge issues with respect to this customer experience. So that basically stems out of the kind of formats, the kind of simplification that is being done in the entire servicing process. For example, like Shalini said, of late, because of the account aggregator and this data for standardization and the data democratization which is happening across the financial entities, including the regulators. So somewhere, if it gets standardized, then that data can be seamlessly used by platforms like ONDC and other account aggregators, in trying to improve. Because one example she gave is the group term. So one of the largest, I mean, one of the easy popular products is the group term life, which they call. That's popular with MFIs. That's popular with banks. and other financial institutions, it's very easy because you average it out. You have the entire data and you have the sanitized data with you. Then it's very easy to create a product. Today, on in the digital space, the two of the easiest examples, I mean, which come to your mind, which can be purchased just on the go, is one is travel insurance, right? The other is like the baggage insurance, or when you're traveling on trains, or wherever you're traveling through IRCTC, embedded products which are built in, which can be purchased. But when it comes to health insurance, you still have huge issues with claim servicing. For example, we at Bajaj, we believe that there is a handholding is required. At you have TPAs, despite the fact that you have got TPAs and other intermediaries who are trying to service the health sector claims. You do require a handholding at the hospital level, at the entry stage level and all. Still, you cannot do away with it, because as long as selling the policy digitally or online, through digital means is easy. Distribution, you can still surmount the challenge, but the real challenge comes in giving a customer experience, a good customer experience, I mean, over the life cycle of these policies. Though we have come a long way, the fintechs have made use of the technology like anything, but the insurtechs and the other insurers, I mean, will be able to use this technology in a better way going forward. That's what I believe. Thank you.
Thank you, Dr. Rao. Just one follow-up question to that. Given the access to so much more information now, do you see a possibility when it comes especially to consumer experience, the insurers using more and more this information for creating more personalized insurances, right? And not just like, say, today, most of the insurance is based on the value of the car, but other countries, you're using it based on the behavior and patterns of the consumer themselves. Do you see that changing in the near future with access to this
Yeah,
data?
yeah, a good question. No, I see there is a trend already in the data-driven underwriting, like you have mentioned. See, once the data gets sanitized and the data, keeping the compliance of the DPP Act and other regulatory compliances, if a sanitized data moves across these account aggregators, across the platforms, while keeping it, while keeping it secure, definitely, a lot of underwriting becomes automated. In some of the standard products, so you don't require special underwriting skills. So the data itself will reveal, the kind of risks that you are exposed to. I will give you one example. For the kind of, the warnings that RBI has given recently to some of the NBFCs and the fintechs, especially on the unsecured consumer lending, basically because of the kind of data analytics that the regulator has done and that the other industries bodies have done. They have come to know the extent of leverage that is being done by consumers, so which is actually being missed by some of the data capturing entities. They are not able to see that you have lent one loan, but they have gone and taken another three loans, and they are not in a position to service. And of late, the delinquencies have gone up in the MFI sector. So the MFI sector, is become a challenge now for the regulator, to carefully monitor that. So the technology plays a crucial role in trying to get this kind of information, and this also helps in fraud prevention, especially in the insurance sector. And so one of the biggest challenges for the insurance industry is fraud. You all know that.
Thank you, Dr. Rao. That was really insightful. Fantastic. We have some more time. We do have one more small talk that we would like to do, but before that, I'd like to invite any questions for the panel, if there are any. None? Great. Fantastic. Well, I guess the panel did such a great job explaining everything. Nobody had any questions left. That's great to know. Fantastic. We would like to call on Devendra from the part of the ONDC team. I believe there's a special topic he'd like to cover. Rushi, would you like to just on that part, please?
So guys, ONDC is like a new concept, about 2 years old, not done anywhere else in the world. So what we're going to ask you now is actually help us collaboratively solve a couple of problems that we have on ONDC. And Devendra is from our policy and legal team. And what he's going to do is he's going to describe what our problem is. And we'll, at the end of this, actually, all know Prerak. If you want to participate in this problem that we are going to pose, please reach out to him and then we'll include you to follow up. So I just hand over to Devendra to describe the couple of problems that we want to try to solve with insurance on ONDC, and then we can take it from there.
Right. Thanks for that, Rishi, and great panel. And thanks for being here, everyone. So I want to take us away a little bit from what you saw about ONDC. So I'm not talking here about insurance being sold using the ONDC network. There is what we've realized is that an element of risk management for the network itself, which means you have participants in the network, you have product sellers, let's say a restaurant, you have a supply side aggregator, which we call seller apps. We have buyer demand side aggregators, which we call buyer apps, and the buyers who are on them. And all of these are stitched together using the protocol specifications that ONDC releases. Now, what happens is in a typical traditional e-commerce scenario, you typically tend to have one entity, one intermediary in the middle who has relationships with everybody. So if there is any question of taking some insurance to manage the risk, let's say transit insurance to cover any damages in during transport, or there is product liability insurance. Say I bought a cell phone of some e-commerce company and it exploded in my hand. Typically there is the locus of risk management is only one. Now what happens with the network is you have two different e-commerce operators involved in any given transaction, typically on the retail side. And additionally, the logistics service provider can be a third platform entirely who's unrelated to both of these. So if you can imagine, there are 5 entities that come together to complete a retail transaction. And that also comes with the attendant risks of doing business, all of this. So, losses during transit, product liability claims, there could be cybersecurity related threats and so on. What we need help thinking through is how can the existing bouquet of products that exist in the world outside be adapted for the network configuration? Now, the answer from all of you might be that, hey, you don't need any modification, just take this and apply. But we would like to form a working group, like Rishi said, to discuss these things threadbare and figure out what kind of insurance products can the insurance industry as it exists offer to the network participants in the ONDC network so that they can manage their risks a little better. And why am I talking to you about this? Why aren't the network participants directly approaching insurance companies? There are two reasons for this. One is that ONDC as a network enabler acts as a coordinating sort of a role. That's why I'm here. And the second thing is, in case there are any modifications required, there are some technology interventions that are required, then we are better placed than anybody else in the network ecosystem to bring this all together. So we are coming to you as sort of a representative of the network. And whoever is interested, like Rishi said, please write to Prerak from IIA. And we will be rolling out this working group by the end of the month. And we'll be thinking through a bunch of problems like what products can be offered to the network, what data you might need to actually think of the product, what parameters, what more information, and so on, so that we can find some good way to de-risk the ONDC network. That's it. Thanks. So one point that I missed, which is also now we might take up in the same working group, is given that ONDC itself is a very distinct entity and something like that doesn't exist outside. Maybe the closest example is NPCI. How do we think about purchasing insurance for ONDC itself? Like there are buyer apps and seller apps and sellers and so on. But if a product liability claim lands on ONDC's head, then what do we do about it? And do we need to think again differently than what the existing market products are? That is the second question, rather the second set of questions that we'll be asking the working group. And yeah, hope to see some participation in that. Thanks.
So just to add a little bit, so what it also becomes, so we need like basically product people who can help us think this through, and then think of it also as a business opportunity, because we have, I don't know, some 300-400 plus network participants that need insuring, and then whatever products around those in the participants on the network, whether they're consumers or sellers, also play. So we also see it as an opportunity. So there's some element of market making that we do here, and then obviously the insurance that we need ourselves to protect from liability that may flow up the chain from the transactions that happen on the network. So we are looking to put something out in 3 months. So trying to move pretty quickly. So I'll also speak with Preg to send everyone like a note that covers what we're looking to do, and you can read up, and then if by Friday or Monday express interest so we can put this together and get it going. So thank you. Any questions about that? There's a question back there.
Maybe I think we are at time, so
We have 1 minute.
we have a minute.
Yeah.
Okay, please.
Yeah, of course. Use all the time, definitely.
So hi, good afternoon. My name is Jay Govind Tripathi. I represent Sorigin Insurance Broker Private Limited from Pune. We are just 1-year-old broking company, but my experience is about 25 years in general insurance. Now my question is like, the kind of technology evolution which is happening or which is underway, like ONDC and Bima Sugam. So I see a lot of product bombarding would be there, on these platforms. But what about the claim service? Are we keeping, the claim service team from ONDC or from Bima Sugam, or still we'll have to go back to the same insurance company and as a consumer deal directly with them and go through the same process of good or bad experience, which as a consumer I'm going through today. So can you throw some light on this?
So I can tell you what we're thinking. This has been surfaced to IIB and a little bit to the General Insurance Council, but we don't know when, if anything, will happen. But here's the thing. So as a protocol, we enable the raising of the claim to the insurance company, but it'll still function the way it does today. But actually, and we were talking about it a little earlier, if the IIB can be enhanced almost to become like an insurance bureau, like a credit bureau as a credit, like for credit, right? Like where you can do instant loan approvals. You can even use that historical data to figure out who to collect from based on their behavior. And you apply to that to IIB, where all the insurance companies share data, share claims data. You could potentially automate claims. Using that data, even use it to underwrite and give insurance policies. So I feel doing that might be super useful to the whole ecosystem, especially for claims, because they say loans are only good as the ones that come back. I mean, insurance policies are only as good as the claims they pay out, right? When you need them. So, I mean, I agree with you. I don't know if we were going to engage with the regulator and the powers that may be to enable this from a technology standpoint, but to answer when is hard to do. So I think we are out of time now. So
thank you so much.